Everyone might be caught up on the stock market falling and collapsing, Bitcoin and crypto markets following that same path, and even real estate starting to turn over and see prices decline. But a big giant market that no one seems to really be looking at is the bond market, that is also collapsing and having massive volatility for an asset that is supposed to be risk-free and worry-free investment. That is everything that the bonds have not been this year, and you can see that this right here, it has been the fourth worst year ever since 1701 for the bond market. And this is a massive wick down, massive negative returns on bonds, which are the investment that are supposed to be risk-free, worry-free, low volatility. You're just supposed to assume that bonds are just super easy, risk-free investments and never have to worry about them, except this year, you really got to worry about them. And we're seeing one of the massive problems in the bond market in the UK with the gilt price. The 30-year gilt price is basically the same thing as like a 30-year treasury for the US. It's just a bond. But you can see this chart. This was where they had a massive collapse. And this point here is where the Bank of England intervened and said that they were going to buy an unlimited number of bonds to bail out this bond market and the pension funds that were in danger of going bankrupt if the bonds kept falling. And you see they had a little bit of recovery, moved back up pretty significantly. It was like 20% move up from the bottoms here when they announced this. And then the Bank of England basically said this right here: my message to pension funds is that you only have 3 days to get this done, meaning you only have 3 days to sell your bonds, or, you know, we're done buying, because the Friday was when their last day of buying bonds. So next week, we'll see what happens to this gilt price if it goes even lower. You can see it's basically at the levels that threatened pension fund bankruptcy already. So if it goes lower than this, we're probably going to see a bunch of pension funds in the UK go bankrupt and go broke. And that could have ripple effects across the world. And anyone who has debt with those companies or has bonds with those companies, that those become worthless. So if you have massive exposure to the UK pensions or some of these companies and they go bankrupt, you also catch a ripple effect of that. And that could happen in the US with companies holding things like maybe BlackRock could have exposure to like pensions like this. But I think a lot of them have said that they've taken down their exposure. They've made it minuscule, so it shouldn't really have an effect anywhere else. But in the UK, it's going to have a big effect. Imagine the people that are using these pension funds as fixed income and are living off of that, and all of a sudden that goes away because they went bankrupt, and now all of the money that you're counting on to live on all of a sudden doesn't exist anymore. So massive problems heading for the UK, and not to mention that they also have a massive drop in the price of the pound. You can see it's just crashing. It's absolutely crashing. If you zoom out even more, you can see that it's pretty much the worst that it's ever been. It's at $1.12, and the bottom here, 106. This was around 103, so it actually got worse than the worst ever for this chart here, at least what this shows. And it's rebounded back to $1.12, but it's still just in a massively bad state where the pound is getting weaker compared to the dollar, and in an environment where the Fed is raising rates and hiking rates, and a lot of people in other currencies are going to dollar bonds and buying bonds from the dollar instead of UK bonds or whatever country you want to say, that it just weakens other currencies. And then you have the people there who save in that currency get their savings deplenished just based off of the fact that they have the currency that's going down in value. Nothing that they've done on their own, just that they have the wrong currency at the time. So you see how that becomes a massive problem for people who have pounds in their savings, that if you have 1,000 pounds and the value is plummeting against the dollar, your cost of living goes up, and then your savings get erased even though the number doesn't change. So just like inflation takes away your savings, but you don't see the change in your account, the currency value going down also takes away your savings, and your price of living and quality of life goes down just because of something that you have no control over. And also with this everything bubble, 60-40 portfolios, worst year-to-date return in the past 100 years. So this is insane still, with bonds that are supposed to be reliable, not volatile, safe asset, or the safest investments you can make. It's not turning out to be that way. Not at all right now. And the everything bubble with stocks plummeting, crypto plummeting, real estate turning around and starting to move down, and now bonds are plummeting. Literally, the everything bubble is popping, and they're probably have to rework the entire 60-40 portfolio because it really doesn't work anymore. 60% stocks, 40% bonds. It's just not great. You can see it's with bonds experiencing this much volatility, you can't depend on the bond to support you in a time where equities fall down, because right now that's what you would be hoping for your 60-40 portfolio, but you wouldn't be getting that. You'd be getting devastating losses and the worst in over a century. And just like the Bank of England had to intervene with their bonds to save the market, Japan had to do the same thing, and it's back to the problems that they were having already, where you can see the currency becoming much more worthless. Bank of Japan tries to intervene, fixes it for a little bit, but we've already well exceeded where the Bank of Japan intervened, and they have this cap on the yields. And right now, I think the Bank of Japan owns about 50% of all Japanese bonds, which is not good. You don't want your central bank to own all of the bonds. That's not really a market. That's not a free market. You're trying to manipulate things, and you see it's breaking for them. The currency is breaking. It's just on a runaway path to being devalued. And on top of that, no one's even trading the bonds. This was in October 11th. There was 3 days where nobody traded Japanese bonds. Basically, if you held a bond and you wanted to sell it, no one bought it. It's worthless. You can't sell it. It's worthless. So anyone who has Japanese bonds is looking at this saying, I mean, is it even worth it? Because really, if you can get rid of it, you want to get rid of it, because if there's no buyers, it's worthless. If you bought it for $100, if you bought a bond for $100 and the price of the bond goes down to $80, at least you can still sell it in like an environment like this, like the Bank of England and England had, where the bonds fell hard and pensions were gonna get margin called and go bankrupt and everything. But there's still a price to that bond that people are buying. There's still buyers there. But in Japan, there's no buyers. The price can be whatever you want. If no one's willing to buy it, it's worthless. And this is really bad for the overall global economy, because Japan's the 3rd largest economy in the world. That one falling down and having massive problems is going to affect the rest of the world. And just like England too is the 5th or 6th largest economy in the world. And these top economies having all these problems and turbulence is going to affect the rest of the world. Something is going to break, and the Fed raising rates and continuing to raising rates, even though things are already breaking elsewhere, something major has to break before the Fed stops raising rates or turns around or anything. And you can also see for the yen, it's also just on a crash course to plummeting to worthless. 1 yen is not even a penny, a sixth of a penny. It's not the lowest it's been, though. You can see it's plummeting, but it's still got a little bit to go. It's got about 2/100ths of a cent to go before it reaches its all-time lows. But with the way it's going, it could probably pretty easily get there, and no bonds are wanted. No one wants to donate or lend money to the Japanese government, and if they can't get any money, they can't fund anything, and Japan could be in trouble. So even though stocks are falling, Bitcoin's falling, crypto's falling, real estate's falling, and the bond market is falling, everything's popping, and the literal everything bubble that people have been talking about, maybe this is the pop for everything, and we're probably going to see some failure. Something has to go catastrophically wrong before anything really takes place again, where we saw like the great financial crisis, Bear Stearns go under. That was the big ripple effect that affected everything and brought everything kind of to an end, where everyone had enough and the bailouts and everyone tried to fix everything then. Right now, the Fed's fighting inflation and raising rates, raising them, and they're not going to stop until something collapses or something comes up that they have to deal with. And the England and Japan collapsing as an economy, I mean, that would be massive and cause massive problems. Seems to be where we might be heading, but, we keep an eye on the bond market. This next week is going to be massive to see what happens in England if these pension funds dumped enough bonds to hold on for dear life of their margin calls, or if they didn't sell enough and they start to go bankrupt and fall off, because that could be a little bit of a catalyst to just spark everything into motion and start seeing a lot of things or companies start to go bankrupt. We'll see what happens next week. Big week to pay attention to England, but that's going to do it for this video. As always, don't forget to smash the like button and subscribe on the road to 1,000 subscribers, and see you guys in my next video.